A few days ago, I was a guest panelist on Sachs Realty's YouTube channel with two other panelists. One was McHone from Arizona and Igoe from Florida, and Todd Sachs was representing Maryland. They're all boots on the ground, working real estate professionals, working with buyers and sellers. It was very interesting to hear what their perspective was on the real estate market and their predictions for the future. When you listen to the media and look at the headlines, everything is very scary sounding because they were supposed to create fear and anxiety. So you will click on the video, fear sells. So we're used to being bombarded with negative news because good news are not sexy. I think that affects the US population's psyche in a major way, and don't get me started on that. But let's talk about what these real estate agents were saying. By the way, if you're new to my channel, my name is Nune. I'm an active working real estate professional in Massachusetts. I'm not a lender, CPA, or financial advisor, so let's be clear about that. If you're thinking of buying or selling in Massachusetts, please reach out to me. I'm always happy to hear from you. This is what Rick from Arizona said.
In our market, when rates went up and doubled and went from 3 to 6 and then up to 7, everybody headed for the hills. Every iBuyer, investor, and people that saw their estimate on Zillow said, "Let me grab it now because this can't end well." And so our listings went up to like 19,000, where we were sitting down at around 5,000. So they took off. And then December 31st, we saw the highest number of expired listings I think I've ever seen in this market. People couldn't get their asking price. And inventory has been dwindling ever since. Yeah, I read that article, and it's one of those things where I like to point out that the headlines don't match the actual commentary. So the headline said, we could see this seismic crash, but then when you get down to the devil in the details, they kind of said, but they may only go down 6%. And so at the beginning, when you started looking at November, December sales, the word crash was on everybody's lips. When you actually start looking at the data and remove yourself from the headlines, you could see that prices were not going to crash. Now, there's always some black swan event that can swoop out of nowhere that can completely change the dynamics of the market. But you can't have prices come down when inventory is coming down and sales are staying either flat or going up. Until that changes, that article doesn't mean anything. And so if that all implodes and layoffs come along, you're probably going to have more issues than just the equity in your home. So I think it's going to take something pretty big to even come close to using the crash word in the Phoenix market.
And Chris from Florida said,
First, I mean, there's tons of misinformation out there, and that's really what I'm committed to trying to pop the illusion up. Florida has absolutely been on fire. I mean, we've got 1,400 people who move here each day, and it was maddeningly frustrating from my perspective. But now it's starting to become a lot more fun because we're starting to see the inventory stack up. The supply side is definitely increasing. But what I'm seeing now is volatility start to come into the market in terms of pricing. So it's been basically 2 years of double-digit gains on average and median sales price in every metro. And now I'm starting to see some anomalies come in where you'll see median sales price may be on the uptick, average sales price may be on the downtick. And until that corrects or balances out in a way that's meaningful, it's going to be, single-digit growth across the board, pretty much in every Florida metro. Commercial real estate is imploding. And the fear that I have around that and the uncertainty that exists in the marketplace from the consumer, which I don't hear a lot of people talking about, is that how much debt is tied to that? How many pensions invested into these triple A-rated investment vehicles and are going to, these buildings are upside down. Their balance sheets are completely upside down. There are no tenants, the subleases that exist in them. Once those contracts are out, they are not going to, they're not going to pay anymore. So what's the bank going to do? Well, they don't want to be in the real estate business. They're going to fire sale them. There is no market. So you get a $600 million building in California, San Francisco, that can't sell for 60. So Okay, that in and of itself is bad, but what's worse is the pension funds that or whatever investment vehicles are tied to those markets, they're going to get crippled. And then what happens? More money printing because the government's not going to allow for those pensions to fail. I
And
mean,
I agree with you. And
I think what you're going to see is the bubbly markets get bubblier. And that's scary because if you think it's unaffordable now, I think that's going to get worse. I think we're going to see more liquidity injections. I think we're going to see more money printing. And I think we're going to see our economy get softer and softer and softer until something has to change.
And Todd from Maryland.
What's going to increase inventory? I guess knocking these buildings down and building housing, but then where will we work? Right? So, I mean, when we're looking at, you know, what is the answer? We got to cut this red tape. We got to cut this stuff. We learned that in Lexington, Massachusetts. Now they're saying, hey, you can build in the populated cities. Everybody wants affordable housing, but they say, not in my neighborhood, right? Well, I don't want to build it here. Are you kidding? I'm not saying that for me. I'm saying that is the way that things are written right now. So, you know, we need to get affordable housing. You know, back in the 50s, the late 30s, the 40s and 50s, we had a, you know, modest 1,000 to 1,200 square foot home, 3-bedroom, 1 bath, right? We all made it happen. We've gotten into McMansions. We buried ourselves in, you know, this is a starter home. We've built a beast. We've built a monster. Builders aren't building affordable housing anymore because it's not profitable. And I just want to kind of show, because, you know, we're talking about a couple different things. We're talking about prices not going down, maybe not going down. Well, I'm going to tell you that we're starting to see some prices going down. And we see it here, you know, where, you know, yes, things are still selling quickly. But we are seeing where in certain markets things are changing quickly too.
What we are seeing in Boston and the close suburbs is somewhat different from other parts of the US. We have extremely low inventory, and everybody said they had low inventory too. So it's very hard for the buyers. It's still a very strong seller's market in Boston area. We have 1.1 months of inventory. A balanced market is 6 months of inventory, so you can compare and see. Here are some numbers from the last month. We have fewer homes on the market, and that keeps driving the prices higher. Will they stay this way as we further into the spring market? Probably not. I'm sure it will come down somewhat. At this point, though, the list to sell price ratio is still more than 100%, meaning that the homes are selling for higher than asking price. 2008, we're still scarred from the 2008 crash, but historically, there's little positive correlation between recessions and a decline in housing prices. Looking back over the last 40 years, let's say, there have been 5 separate recessions: 1980, 81, 82, 90, 91, 2001, and 2008. They have generally occurred at times of major political upheaval and at fairly predictable pace. Looking at the housing prices, though, during the same time periods, you see the following changes. In 1980, 2.6% decline. In 2001, it was actually going higher by 4.4%. In 2008 was 16.7% down. These are national numbers. While small declines in housing prices generally occur during a recession, with the exception of 2001, in most cases the declines are so small that they can be easily explained as part of normal pattern of market fluctuations that are occurring all the time. 2008 crash was different because it was centered around mortgages and not so perfect lending practices. Since then, a lot has changed. People have more equity in their houses. They have bigger down payments, and the banks are stricter with their policies. Now again, I'm not a financial advisor or an economist. I'm a real estate agent just giving you my opinion. One of the towns hit hardest during the 2008 recession was Belchertown, Massachusetts. Let's take that town as a test subject. This town in Hampshire County, with a population of about 16,000 people, had one of the biggest declines in 2007. For comparison, here are the sales number from 2007 compared to 2006. After that, it started rebounding, and now it's doing great. Have the prices started to soften in Belchertown today? On May 10th, there were 7 fewer houses for sale than in 2022, and the prices were higher by 4%. So no, signs of distress, no signs. Will it happen in a year or two? We will see. I'll keep you posted. Are foreclosures flooding the market? After the pandemic, some of the houses came back. You know, we have foreclosures, but when you look at the numbers, you see that in 2018, before the pandemic, we had bigger numbers of foreclosures and short sales than in 2023. Why am I thinking that Massachusetts home prices are not going to be affected by a recession in a huge way? Yes, the market will come down somewhat and we might see some small price declines, but Massachusetts is consistently showing up on the top few places in the charts of the most prosperous states. Massachusetts companies are laying thousands of people. There's no job security. There are people thinking that that's it, recession is here. The state's unemployment rate is 3.4% in April. That's the second time since 1969 that the rate was lower than 3.5%, not counting January 2023. What are the major industries in Massachusetts keeping the state industry diversified? Number 1, tech, pharmaceutical, and biotech companies like Dell Technologies and Vertex Pharmaceuticals. Healthcare, Massachusetts General Hospital. Number 3, insurance companies like Liberty Mutual Group. Number 4, banking, financial services like Rockland Trust. Number 5, education like UMass Medical School in Worcester. Massachusetts is one of the most prosperous states in the US. I want to know what you think about this. Do you think Massachusetts will see any major home price declines? Will it be like 2008 or maybe worse? So what are my predictions for 2023? Make sure you write what your predictions are in the comments below. I think that the interest rates will go down to the 5s in the second half of 2023 and the market will wake up from the deep freeze and get frantic again and the prices will continue to go higher. So if you are in the market to buy now, you are ready and capable and thinking, oh, should I wait? Should I buy now? I would say buy, don't wait. A lot of refinancing will be happening in 2024, then the prices will be higher then. Will the home prices ever come down? I think they will come down if we have major global recession events. If enough homes are built to satisfy the demand, if the government comes up with programs to build affordable homes faster and create more dense neighborhoods, it might take 5 to 10 years. Let me know what you think and click that notification button so you will not miss any future videos, and subscribe. Don't forget to subscribe.